Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Friday, July 31st. Today on the show, we're going to get to Amazon and Apple's quarterly results. We're going to start with a string of headlines around the big AI labs yesterday, including an Anthropic hack and OpenAI's new pricing structure. We're then going to turn to our editors for this week's edition of the Editor's Cut. We'll take a bird's eye view on big tech's quarterly results at large and also look back on Tim Cook's tenure at Apple. And to close out the show, we'll discuss our weekend big read on an experimental new program in Montana that will allow almost anyone to access drugs that haven't yet been approved by the FDA. It's going to be a great show, so let's get right on into it. Anthropic said yesterday that Claude hacked into the systems of 3 companies during an internal security review. That review came after OpenAI disclosed that one of its models had breached Hugging Face. Here to comment on the latest on those attacks is Anastasios Angelopoulos, co-founder and CEO of Arena. Anastasios, welcome back to the show. It's great to have you here.
Happy to be here. Excited to talk about this.
So we got a lot to get through. So let's start with the Anthropic hack. I mean, funny thing to me was they didn't discover it until OpenAI had its hack, and then it decided to go back and say, we're going to audit everything. But they found that it did, and I wonder, what are your thoughts here?
Well, listen, there's 2 stories here. There's the OpenAI story and the Anthropic story. Both are incredibly entertaining. So let's talk about the OpenAI story first. What happened is
Well,
that
let's talk about Anthropic.
you want to talk about
That's
Anthropic?
the latest one. Yeah,
Sure.
yeah.
That's fine. Let's talk about Anthropic first. So basically, in the context of like some security tests that they were running internally, they found that these Anthropic models had actually hacked 3 real companies. And so the way that it worked was like this. One of the companies was a company that had the same name as a fake target that they were running a test against inside their environment. So they said, go hack the information. And the information was a fictional target they had made inside their little sandbox. And then the model was like, oh, I know the information, the news outlet. And then it escaped the testing environment that Anthropic had made and went and hacked the real company. So it wasn't obviously the information, but it was a different company. And that's what
Right.
happened. The
Okay. So
second thing
honest
that
mistake.
happened, yeah, honest mistake. Well, I don't know. I mean, like, who's honest here? The model's not honest. The model sort of deceived the
Yeah.
company
Okay.
into, the thinking that it was like it basically like escaped its guardrails, right? So what we're seeing is that these models, both OpenAI and Anthropic, are in these escape from prison scenarios where they started inside like a locked cell to perform these experiments, and then are finding their way to sort of like scratch and claw their way out. The second incident that the Anthropic model, this was Mythos. It published a malicious package to PyPy that you could actually download. Um, and the third was that an unreleased internal model, it scanned a bunch of internet targets and basically almost did a SQL injection type attack. This is like the types of threats that are possible with
Right.
models
So
when
so
they're
these are the menu of hacks. We've talked to people. People say, look, stuff like this will keep happening. The models will get better. I mean, this is all the cost of development. What are the implications, that you see for businesses here? Is it literally just you have to beef up your security practice in a world where these mistakes will continue to happen? Or do we have implications in terms of which model to use? You're in the business of ranking these models. I wonder if you take that or these events into consideration. Like, what are the ripple effects of these hacks, do you think?
Yeah, well, certainly at Arena, we think a lot about how we're going to do security as a result of this, and the reason is because, like, you have to, and this is probably the narrative that these companies want to promote by talking about this, is that you have to start thinking about these models as potential nefarious actors that may even within the security guardrails or benchmarks that you set for them, they may even know that they're being benchmarked, but then when you put them out in the real world, they could really do anything because it's basically a big win for the effective altruist guys that were saying this paperclip maximizer story from the beginning. That if you set a goal and you're not specific enough about all the guardrails that you need along the way, then the model might go and do something else crazy. So, the paperclip maximizer story is that if you set the goal of producing the largest number of paper clips, then the model might like eat the whole world to make paper clips and kill everybody in order to make paper clips out of them.
Right.
Right. So this is kind of what we're seeing is that you told the model to do something inside of a small security test, and then instead it hacked a real company. I mean, how the heck were you supposed to know that that was going to happen? And so what you really need is somebody looking at the post deployment consequences of this model. Probably there needs to be several steps of auditing that's looking at the model all the time and saying, hey, are you doing something nefarious? Are you misleading your environment? Are
Right.
you doing something malicious? Are you hacking? Are you
More
scheming?
more people. I mean, more people. Basically, I mean, this is where the hiring is helpful. That you need more people monitoring the stuff basically at these companies
Or
after
more
deployment.
agents, right? And I think that the agents is a more
But the
scalable way
agents,
of doing it.
are run by the models themselves, so it's a little.
Dude, it's the agents that you have to have an attacker and a defender agent. There's no way a human's gonna be able to look at all this. I
Right.
mean, these things are happening at, like, the speed of light. They're happening on a computer. And
Right.
so,
Right.
having a human able to audit these things is just gonna be impossible. We're gonna be in a world where with more agents than humans. You can't have a human looking at all of this. You're gonna have to have automated defensive capabilities.
Right. I want to get through a couple other headlines with you about models. So, OpenAI changed up their pricing structure for a couple of their models. So, Luna, which is the cheaper model in the 5.6 family, that is 80% cheaper. Terra is the mid tier model, it's 20% cheaper. Take me inside what you think OpenAI is trying to do with this pricing strategy. And I mean, look, on the surface here, it's they're just trying to win the market. I mean, that's obvious here. But where do you think they're trying to position themselves in the market compared to Anthropic? Because we had folks on the show come on a little bit earlier this week talking about how Anthropic, they're with Opus 5, they're kind of moving up a weight class at the same price performance that they had with their older models. This is OpenAI coming down with price. So are we sort of seeing a delineation here between what ends of the market these two companies are targeting?
Yeah, so I think the secular trend that's happening here is that there was the token maxing era earlier this year, and now everybody's talking about efficiency. Everybody's talking about what model is right sized and best for my task. Of course, it's something that on Arena we have the best information about because we do all this real world benchmarking. And so what we see in the new pricing for Luna is that it is really an extraordinary Pareto optimal model in the sense that there's no model in its price range that's necessarily better than Luna. And that's really the game that OpenAI wants to win. They don't just want to build the biggest, baddest model that's going to cost you $100 a token and is going to be so smart necessarily. I mean, they want to win that too. But another huge part of the narrative is going to be winning the cost performance trade offs. Is my business getting ROI? Am I getting the outcomes that I need at the prices that I need? And this is this is what's on everybody's mind because everyone's done spending $1,000 asking an LLM to tell it about the weather.
Hmm. Do you think that this was a direct response to the open source, closed source discussions that have been going on and the fact that there is a conversation about spending
How
less?
can there not be a response? How can there not be a response when a model comes out? It's number one in the code arena,
Yeah.
and then it's less expensive than the frontier models from the labs. It's the same price as Sonnet. Of
Hmm.
course, it's driven in part by competition. Competition is so good for us as consumers of LLMs. It means that all these labs are going to be competing to get the lowest and lowest and lowest price because of adoption reasons.
And when you talk to folks using these models, customers, et cetera, I mean, I already saw some businesses putting out bulletins saying, just so that you can now use this many more tokens for your subscription price. So, what have the reviews been in the developer community of this pricing change? How much of an impact will it have for them?
It'll have a big impact, but the open source thing is also a huge factor here because it's not just about pricing in open source. The promise of the open source is, hey, you can own your own intelligence. The model's going to live on your server. You're not
Yeah.
sending your data to some other company that might eventually copy your business model. You're not like you don't have to worry about the government shutting off your source of intelligence that your business has been building on.
Right.
And
So
that's
it
really
might not do everything. I mean, just because it's cheaper, it's not like people are going to switch right away.
Exactly, and not only, but and there's structural reasons why the open source models are going to be better for businesses. They're just going to decrease so much risk, and they're going to make people feel more ownership. And that's the whole story around AI sovereignty. Every
Right.
company wants AI sovereignty, and this is such a funny word. It's like, why do companies need sovereignty? They're not countries. But the point is that everyone wants to own their own intelligence, and even if you win on price, you really can't win that race when you're a closed source model provider. So they better win on price at least.
Right. I know you got to run. Let me ask you one more quick question. Thinking Machines Lab, they released their latest model. It was a small model in their Inkling family. Just help us understand what is different about this model and any early reactions you're seeing from people.
Yeah, absolutely. So if you look on the arena leaderboards, the new thinking machines, the small model, the Inkling Small, is like number 90 overall. Then when you subset to open source models, it's like number 21. But that doesn't tell the whole story because it's actually a very small and efficient model. So when you subset to models that are within the same weight class as that model, which is a little model and a cheap model, it's actually top three, which
And
is
who would you compare it against? Like
like
who are
the
the other?
Gemma 4, the smaller Gemma 4 model, and so on. There's a few of these.
Okay.
And it's and that is an incredible achievement because if that's the type of model that you could potentially even run on a smaller computer, or maybe even locally, that's where we're pushing towards. And they've absolutely built a frontier model in that regard. That's the early reaction.
Right. Great. Well, I want to thank you, Anastasios, for coming on. That is Anastasios Angelopoulos, the CEO of Arena here on TITV. Apple investors were spooked by the supply constraints the company flagged on its quarterly results last night. Total revenue growth is expected to decelerate. It grew 16% in the most recent quarter, and it's expected to grow between 9 and 11% in the current quarter. For more color on that, I want to bring on Barton Crockett, Senior Research Analyst at Rosenblatt Securities. Barton, welcome to the show. It's great to have you back.
Great. Thank you. Happy to be here.
What were the headlines from last night's results for Apple?
Well, I think that the headline is that their iPhone cycle continues to be historic, tremendous. We're near the end of that, and next year they have to comp it, and so I think that's a big question. I mean, historically and reasonably, growth would slow after the 20% plus type surge you've had in this iPhone generation. And that's coupled with this really crazy macro, right, where supply chain is challenged. It's hard for a company that has historically been able to get what it wants when it wants, Apple to get what it wants when it wants, and that's a new challenge for them. And with the stock at really historically high kind of valuations, the setup is really kind of interesting, I think, for a great company.
Why was this iPhone cycle so strong specifically?
That's a really great question. I think that Apple makes great products, and I think they made great iPhones here. I think that a lot of people bought an iPhone 12 during the pandemic, and a lot of those iPhone 12s need to be replaced. And so it's kind of a baby boomlet, kind of an echo of that boom that we had. So
Mm,
phones have died, they've had to be replaced, and Apple's made some great devices, and people have gone to them.
right, and then there's also the issue of which iPhones are actually able to, run the Apple Intelligence,
Mhm.
services. I mean, I can't remember exactly what it was, but I think it was the last model was the one I think you had
Yeah.
to get the Apple Intelligence. The other headline, obviously, that came out of the results was the supply constraints that they talked about. And
Mhm.
the interesting thing was Tim Cook, he very much seemed to delineate between the memory chip crunch and then the supply constraints that they're seeing at
Mhm.
TSMC for these advanced nodes or the advanced processors, I guess, that iPhones need.
Right, right.
How do you factor in supply constraints into your model when you think about the long-term valuation of the company, given that it's so cyclical?
Yeah. Look, the first thing I think is this is not something you normally have to think about. I mean, really, I can't really remember when there's been this kind of sustained pressure on Apple. Um, and for really a generation, they've been the big man on the block, and they're not right now. And so it does, at the end of the day, though, seem that this is unlikely to be permanent. that, the market will find a way to make, much of what Apple needs, and that the world will normalize. I just don't know when. And I'm kind of in my kind of thought about what the terminal value is for an Apple and a long-term kind of DCF. I'm not going to have that there for a couple of interim years. It's going to be there, and it's going to be a question mark about how long that continues.
Right. When you say Apple is not the big man on the block now, I mean,
Yeah.
what's the context in which you're saying this? There's certainly the AI story, but how else are you referring to that story there?
Well, it's the AI story, right? I mean, AI sucked up so much capacity in memory at TSMC. They're not the main driver of growth at those companies today,
Right.
and the main source of profit. And that's just a different place for them to sit. It does, at the end of the day, get reflected in, Apple having to charge more and not being able to get as much product as it wanted. And ultimately, that's the consumer kind of feeling the AI pinch in that way, but that's what's going on.
Right. And so that's actually something I hadn't think about, which is that
Mhm.
when you think about leverage that
Mhm.
companies have with TSMC, it very much depends on the size of the orders that they're placing, and where the iPhones used to be the dominant product. I guess now everything is focused on GPUs, and that's making it harder for them to get that capacity. They talked a little bit about rising prices last night on the
Mhm.
call. How are you factoring that into your modeling?
Well, it's you kind of stick your finger in the wind and try and get at it. Nobody really knows precisely. There's no great secret sauce to it. What we do know is that you can go back for years and years and see when they have these occasional spikes in iPhone sales. One year, the next year, it's always been a much slower year, flattish or down. And so the pattern would seem to argue for that. And then the noise is they're kind of be charging more for phones. There's some price sensitivity. People probably are willing to be less price sensitive for Apple products than others. And they've got a new premium priced foldable phone that's going to be in the mix.
Yeah.
You might be changing
Almost,
them.
I mean, 2,500 bucks, up to that much, I guess, is what people are talking about.
Yeah, yeah. And, there's definitely a niche. I don't think it's mainstream, but
So
there's
you
definitely.
don't think it's gonna be big for the company?
I think it's gonna be, a few percent of sales, a low to mid single digit percent of sales at, a real premium price, and, kind of 2x the price.
Yeah.
And so it might be, higher than that kind of percent of sales. And, within that, though, there's going to be some cannibalization from other devices, and there's going to be this difficult comp. So I think it still settles out that Apple, after the September quarter, when you have to face the music of strong comps, sales are kind of be much slower than they are today.
Right. We'll come back to the foldable phone in a second. The services revenue was the other interesting part of
Mhm.
last night's results. So, there was there's expected to be some deceleration in that business, and the interesting part, was that I believe, the margin also came down for services, which they attributed to a different product mix in
Mhm.
services. So, I mean, this was kind of interesting to me, the fact that growth was coming down, margin was coming down. Were you satisfied by the explanation there? Or what's going on in that business?
Well, I'm not terribly concerned. I mean, they were growing, I think, 12% in the quarter in services. I think the implicit in the guidance when they talked about foreign exchange is that they decelerate maybe to 10% in the September quarter. So things are slowing down some. The margin on services is really high, and so a couple of points here or there, up or down, is really a rounding error. Doesn't matter relative to the mix of services versus products, and so all that's fine. I do think that the question of services growth is one of, geez, you have this platform, you should be able to milk it 10 ways to Tuesday for services revenue. But there is a little bit of a governor in that, there's some antitrust concerns. And there's also just what can they do well? They've been incredibly strong at things you wouldn't think. Like they've done great with movies, they've done great with TV shows. And you wouldn't have expected that. I wouldn't have expected that from a Tim Cook-led company, but there we have it.
Right.
And but
Ted Lasso, I mean, he was he's clearly a big fan.
yeah, he's a big fan of Lasso. They did the Formula One movie. They got that
Yeah.
in the fold, and they're doing great. But I think the real way you make money in services is through the App Store and through the cloud. I mean, the cloud storage that they sell, and I think that the App Store is really in this great place, right? With so many people vibe coding new apps and they can't get them all out onto the App Store. Presumably, that should be a healthy backdrop for revenue. But then there's the imponderable is what happens if the future is some type of smartphone without an app store where everything's an AI interface. What happens if, Johnny Ive makes that work through Open AI or some such? So
Yeah.
there's that
Well,
imponderable
and
question.
I mean, that's what I was a little bit confused about was on the backs of the vibe coding,
Mhm,
easy to make an app boom.
mhm,
Uh, that's why, the services revenue, the App Store, I guess, I mean, they didn't seem to break out exactly what was going on with the App Store exactly.
mhm.
I would have thought, it would have set the
Yeah.
stage for acceleration in that category.
Yeah, we'll have to kind of probe a little bit more, but
Yeah,
if I was to guess, without having done survey work in this point exactly, um, the consumer's doing a lot with apps, but maybe a little bit of time is being spent with some apps in particular, your LLMs, your AI apps, and maybe that's eating into some of the other
right.
time spent gaming, which is really what drives the app revenue.
Right. Before I let you go, let's talk about what wasn't discussed as much on the call.
Uh-huh.
So, this whole debate around open source and closed source models, we know that
Mhm,
Apple has taken a bit of a different tone with AI, a little bit of a less aggressive tone in terms of its own build. Yeah, Apple hasn't really seemed to opine on that at all, and
mhm.
I wondered where you think they stand on the issue, what you think their calculus here is on supporting the frontier labs, but then also the reality that open source is, popular right now.
Right. Well, I think that what they put in the app stores is one question, and I'm sure they're going to be as open as the regulations would be comfortable with. They're not going to push the envelope. But and I think there's a regulatory question in terms of what they use themselves. Obviously, they've wedded Gemini as the foundation, and then they do their own customization on top. Um, I think the longer term question is Gemini the right answer, or does it need to be in the future? Something different outside of China. Obviously, in China, they've got a deal with Alibaba with Quen, and another deal, and there's this regional balkanization of LLMs, which is forcing their hand to a degree. But in the future, maybe they'll be able to do what the rest of the world's moving towards, which is choose the cheapest model for the job, a mix of very inexpensive, open source models from a range of players, and then the edge case on the frontier. And they've been jacking up their spending on R&D. And maybe that'll be one outcome of it is they can build some more efficiency and effectiveness on the service end of it.
And I missed that one detail. Did they have a deal with Alibaba in China for using models there?
Yeah, that's my understanding is that's one of
Okay,
two kind of sources in China for them, but
got it.
strictly for China.
Cool. Well, Barton, I wanna thank you for I forgot to ask you, are you gonna get the foldable iPhone, do you think, at 2,500? That's what I was gonna ask.
It's probably not my first spend.
Okay,
I
alright.
don't know if I'm kind of expensive,
I'm
but
gonna get it. I'm gonna get it. I'm gonna
yeah,
be one of the only people apparently, who are gonna get it 'cause, most people I talk to are actually not as enthusiastic as I am, but I think it should be
yeah.
interesting.
Cool. Well, tell me about it.
Right? Okay, well, Barton, I wanna thank you for coming on. That is Barton
Okay.
Crockett, Senior Research Analyst at Rosenblatt Securities here on TITV. Amazon shares jumped after its quarterly results last night. AWS growth accelerated by 9 percentage points compared to last quarter's growth rate. I want to bring on Lloyd Walmsley, Internet Equity Research Analyst at Mizuho, to talk more about what we should be paying attention to. Lloyd, welcome to the show. It's great to have you here.
Great to be here. Thanks for having me.
So let's talk about the AWS acceleration. What is driving that right now?
Yeah, so I think it's two big things they called out. One, obviously, AI is the growth there is tremendous, and they're bringing capacity online from Project Rainier, and so the minute they bring it online, they can monetize it. And then the second thing they talked about was chips. They the Trainium chips, which is obviously part of AI, that so it's overlap, it's not completely different. And then the Graviton chips, they're just seeing tremendous demand for those chips, largely also from AI. So those are the two big things. And then look, they're also improving their own services around AI, sort of moving up the software stack, whether that's security, whether that's call center product. They're doing a lot in and around AI that's helping them as well.
Right. So they obviously they said these two figures, $25 billion run rate for AI related revenue, I think it was, and then $25 billion for the run rate for chips. And they didn't give us a whole lot of color in terms of what's inside those two $25 billion businesses. Let's start with the AI revenue. Do you have any sense on your end, based on your research? I mean, what are they including and excluding in that segment at all?
Yeah, so there's a bunch of different components. I think the big ones are, Trainium chips are part of that.
Yeah. That
And even
that would be the chips revenue, right?
well, so these are not two separate buckets of revenue. There's significant overlap.
Oh, okay, okay.
And so, to your point, they don't disclose that much, but there's significant overlap. And so a lot of AI consumption involves chips, um, and I think that's a big part of it. And then Bedrock is a huge part of it. Obviously, their platform where their enterprise customers can deploy any model they want, and have it managed and hosted by Amazon. Like I think that is on a complete tear, as well as more and more companies who have been you know experimenting, running POCs in AI, start to move into scaled inference. That is Amazon's wheelhouse, right? They have very low cost inference,
Yeah.
and they've got all their customers who already have the bulk of their data sitting on AWS. And so it's a natural place to run your AI inference. And that's only gotten more compelling now that they have OpenAI's models as part of Bedrock as well.
Right, and I'm seeing here, I should have caught this, but there has to be significant overlap because the total revenue for AWS was 42, which is lower than 25 plus 25. But I want to move to sort of the broad comparing Amazon's results to the other big tech companies and
Yep.
hyperscalers that reported because
Yep.
I mean, if you look at who was burning cash and who was not, Microsoft came out, they said we are not going to burn cash. Amazon was, Google was. Google investors initially sent the stock down after results, but Amazon, they didn't seem so concerned. Both businesses had acceleration in their cloud businesses. So what do you attribute the difference to in the investors' reaction?
Yeah. So I think there's been a lot of bad um, I wouldn't even say reporting. I think throughout the investor community, the press community, people have attributed the weakness at Google and Meta to this like capex and free cash flow issue. I don't think that surprised anybody, and I think what led to the weakness at Google was it wasn't a clean quarter, right? They were talking down search growth in the second half. It was the first quarter where search actually missed, and they've been clobbering numbers. So I think there were some factors at Google that were unrelated to the capex. Like every investor I've spoken to before and after the quarter expected capex to go up this quarter. So I don't think that was the surprise. I think the surprise was marginal weakness in the core business. And then you turn to Meta. Again, everyone expected capex to go up. The surprise was everybody expected them to announce some sort of rental deal with someone like Anthropic. And not only did they not announce a deal, they got on their call and said, we've gotten a lot of offers and we might do this, but like we might not because we'd rather sell a higher value intelligence than like our own infrastructure. And so whereas Amazon gets on and yeah, they spent the capex went up, but like to your intro point, 9 points of acceleration. And I think one of the problems that has bedeviled Amazon stock over the last year plus has been they're spending all this money in CapEx and they see this small little nice but not that impressive acceleration at AWS, right? It was 3 points and then it became 4 points. Well, good, but like you're spending $200 billion over the last 2 years. Like we need more than 4 points. And this quarter, we got 9 points and we got record margins in a quarter where margins usually come down. And everything they said on their call suggested that these margins weren't unusual and should continue to be very healthy, and that the AI margins themselves are on track to tracking ahead of the core cloud business. So like we're finally getting everything we've been wanting for a long time at Amazon. Whereas you look at Meta, you look at Google, and they weren't clean quarters.
Right.
And so I don't think the bottom line, I don't think it was the CapEx. I don't think it was the negative free cash flow. I think if Meta was knocking the ball off on an AI product, no one would be as concerned on the CapEx spending. The problem is no one even knows what they're building really, beyond like another chat.
So let me ask you, so on the AWS front, do you think the growth is sustainable? The margin expansion, is it sustainable? What are you expecting?
Yeah, so we're expecting growth to pick up again in the third quarter. We're at about 42% growth in the third quarter. And then we do expect margin to come down sequentially a little bit, but broadly continue at, in this range. I think, to some extent we try to be conservative in our modeling, and we're a hair ahead of their guidance for operating income for the third quarter. I think it's quite possible that they hold this level of margin and the AWS business into the third quarter, into next year. One thing obviously that we're looking closely at is depreciation. That growth should continue to pick up as well with all the CapEx. And so that could weigh on margin a little bit going forward. But broadly speaking, I think we came out of this quarter feeling significantly better about the medium-term margin structure at AWS and within the AI component of that as well.
What did you make of Andy Jassy's comments on Amazon's own models? And what did you make of those comments in the context of recent reporting? Insider had reported that they have trimmed staff in their AGI group. And the Nova model family has been a question for Amazon. How good is it? How much they're investing in it? I mean, he started his entire response to the question saying, if we didn't build our own models, we would still be committed to offering a lot of variety. That said, we are still pursuing Nova models. I find myself a little bit confused as to whether or not they are actually prioritizing building their own models. Where do you say on that?
I think it's a great question. And when we listen to Jassy, like our first instinct was, it does sound like an uptick in how much work they are putting into or focus they're putting in on their own models. And of course, my first reaction after that is, do we have a big investment cycle coming as they try to keep up with the Joneses on a frontier model? I think after catching up with the company last night and talking through this, they have I don't think it's as new as it sounded. Like they've had the Nova family for quite some time. The training and costs associated with that is in the base. They've been working on these for a few years, and then I don't think it's going to be anything like, for example, what we saw at Meta in terms of just all hands on deck, invest whatever it takes to compete at the frontier. This seems like a much more responsible, disciplined effort to have a strong internal model without breaking the bank. So it seems like their positioning on this is much more disciplined and rational.
Little more Apple-esque in terms of we're not going to throw everything at the kitchen sink on this initiative. So.
Exactly.
Great. Well, Lloyd, I want to thank you for coming on. That is Lloyd Walmsley, Internet Equity Research Analyst at Mizuho here on TITV. We are wrapping up a big couple weeks of tech earnings, and in this week's edition of the Editor's Cut, we're bringing on Martin Pierce, co-executive editor, and Nick Wingfield, our features editor, for their view on all of it. Martin and Nick, welcome to the show. It's great to have you back. So, Martin, you have been studying all the big tech earnings at large. We've had the three, or if you call Meta a hyperscaler, the four big hyperscalers that have
Let's not
reported.
use
What
that word.
we don't like it.
It's
We
a
don't like it.
jargon term. They're all big tech companies, and I've been exhaustively listening to the earnings call.
And
always fun.
which one stood out to you the most?
The Meta call is probably the most interesting because the other companies, the other cloud firms are all spending a fortune on CapEx, but all of them say that they cannot meet demand for AI. And so they feel very confident that the money they're spending will generate a return. I mean, I think they all say that as soon as they can get the servers and the chips that they're investing in, as soon as they can get that into operation, they have demand from customers. So that's understandable. Meta, on the other hand, doesn't have any outside customers. Mark Zuckerberg seems extremely undecided whether he wants to go into that business. And instead, he talks in this very futuristic way about 5 years' time, billions of us are going to be using personal super agents to do everything from handling our romantic relationships to managing our homes. I mean, this is a vision of the future which is just not believable. And I mean, I had to say, if I was an investor in that company, I would be looking for the exits because I think this is the issue. He can just do whatever he wants, and he is spending a fortune on a future that, is hard to believe.
But I mean, the flip argument, you could say that Meta has options, right? You could say they could go a couple different ways and still make a ton of money.
Well, they could go one way to make some money, which is to rent out that compute. But Zuckerberg has made it pretty clear he doesn't really want to. His heart is not in it. So I don't know when you say the other way. What's the other way? I mean, he's just burning the cash.
Yeah.
He's not burning cash, to be clear, although they're close to it. But they're actually very close to it. But he's spending a fortune. So
Right. Nick, anything stand out to you from the earnings the past couple weeks?
Well, I was paying especially close attention to Apple yesterday, and we have a changing of the guard that's going on there. This is Tim Cook's last, or September will be the last quarter as CEO. He's handing the baton off to John Ternus to take over. And you have this, I don't know if it's a bittersweet moment, but you certainly have some interesting issues coming up with AI. On the one hand, iPhone sales are pretty strong. The company performed pretty well, but they're getting killed on component prices and are going to be supply constrained on their products going into the next quarter. And now you could argue that after that, things are actually looking, decent for them. They're going to introduce, we and others have reported, a foldable iPhone, which will be very expensive, but possibly drive an upgrade cycle for the high end of the market. So, Apple, I think, is feeling pretty good. Also, they're as everyone knows, have not been spending as much on AI. So that may start to look kind of smart headed into the back half of the year and 2027.
Martin, I mean, if you just reflect for a minute on Tim Cook's era at the company, I mean,
it's very exciting. It's beyond exciting.
double digit growth.
Love that word. Everything
double digit. So 20 times the stock price actually it grew more than 20-fold over his era. So he can claim the double digit there as well. But one of the questions, I guess, has been, well, what is the next iPhone? What's the next big product? What's the next big thing for Apple? Is Apple still an innovation-focused company? Is it just marginal improvements year after year? Where do you think he sort of leaves that story, and where do you think Ternus takes it?
Well, I think you'd have to say that Cook has been an excellent CEO in terms of making money for investors in Apple. And that's obviously one of the main things that public companies have to do. You might say he hasn't been as good at assuring the future because Apple hasn't really innovated very much. Um, and that's something that Ternus hopefully can fix. But the problem is we all still use iPhones, despite people like Zuckerberg and others thinking that maybe AI will uh, change that. I'm sort of skeptical. I think that people will use smartphones for a good long while, and you have to kind of believe that Apple will make money from iPhones, maybe not growing very much, but make a huge amount as they do now for quite a long time. So it's not a growth stock, maybe, but you can make a whole lot of money in d- dividends, and it's reliable. So.
Yeah.
Uh, I think he's done a pretty good job, but he's been very cautious, and that's the real issue with him, maybe.
Nick, do you think Ternus will change the story at all? Turn it into a growth story? Will he be able to introduce, massively new innovative products for customers, consumers?
Well, if you believe the reports out there, they are going to enter some new categories, and that's happened under John Ternus as one of the top hardware people at the company. So, there's talk of a variety of smart home products, some kind of smart home hub, a doorbell cam, things like that. But none of these categories sound all that big. I mean, and these are sort of well established categories that Amazon and others, Google have been in. So, we'll have to see. Really, I mean, I think the biggest thing that they have to solve is AI, and to show what they can do with AI. I mean, maybe they can reinvent the iPhone. They, their biggest sort of looming competitor out there, just like theoretically, is OpenAI, which has hired all these Apple people, hundreds of Apple people, and is working on a family of devices. And Apple is, so upset over this and the possibility that they're, stealing trade secrets from Apple that they've even sued OpenAI. So
Yeah.
I think that if they can, I mean, I don't know what your personal experience is like, but my most frustrating thing is no longer the battery. It's no longer, a variety of the things that used to tick me off. It's really that I cannot get Siri to do the things I want it to do. There's so much possibility there. So I think that they do have an opportunity to reinvent the iPhone if they can get AI right.
Yeah. Well, Martin established to me earlier this morning in the office he will not be buying the foldable iPhone. So,
Yeah, the foldable iPhone, that's a small market. I mean, I know Nick doesn't agree with me on this, but
are you going to buy it, Nick? Are you going to buy it?
No, I won't buy it, but there will be people that buy it.
there will
People
be very
are,
rich people who buy it, but
Yeah.
it is a small market. I mean, it's $2,500. How many people can
Let's talk. Let's talk in after the December quarter and see how the market responds to it.
All right. Well, I want to thank you both for coming on. That is Martin Pierce and Nick Wingfield, two of our editors here at The Information. To close out the show, I want to talk about a new program in Montana that will allow almost anyone the right to access and try drugs that have not yet been approved by the FDA. In many ways, the program itself is an experiment, and it is the subject of our weekend big read written by our health and science reporter, Amy Doxer Marcus. I want to bring on Amy to share more about her reporting. Amy, welcome to the show. It's great to have you back.
Thank you. Great to see you.
So your story centers around this startup accelerator called Infinita and the work that they're doing in Montana. What is Infinita? Let's start there.
Infinite is best known as being this startup accelerator that worked first in Prospera, which is an island off of Honduras. They're funded by Tim Draper and others, and their goal is to try to accelerate drug development and to help biotechs get drug approvals and get drugs to patients.
Okay. And so what are they doing in Montana now?
Yeah, exactly. Well, what do those two places have in common? When I spoke with the CEO of Infinita, he was explaining that Prospera hadn't worked out exactly as they imagined. Drug companies, they were excited, but sort of said to him, "Well, what happens next? Like with all this data, are we going to be able to get drug approvals?" And he started thinking that Montana might be a better place. Montana, like many states in the United States, has passed a right to try law, which is a law that initially started to let very, very sick people get access to experimental drugs that hadn't yet been approved by the Food and Drug Administration. But over the years, Montana's gone much farther than other states in the United States in opening up access to lots and lots of other patients. And Infinita saw an opportunity there to try their experiment.
So the experiment here that they're running is it's the idea that, hey, there are drugs that are not yet approved by the FDA. It's not for anyone. It's not like anyone can access these drugs. It's a certain group of people, but it's a wider group of people than it would be in other states, right? We're giving them access to try them out, essentially.
That is correct. I mean, the Montana program expands on and has sort of unusual features than most other states. And let me just briefly tell you what they are. Main one is you don't have to be terminally ill or even very sick at all. You certainly people who are will want to access this program, but you could be just a healthy person who's worried about aging and wants to get access to unapproved therapies that might extend your health span or your lifespan. So that's already a unique feature. But the second and most important feature is that companies, biotechs, they are allowed under the Montana rules to charge a profit, generate profit even before proving that their drug actually does what it says it
Hmm.
does. So that's another sort of unique feature. And Montana last week finally sort of like publicized the rules for all of this. They're going to have these state licensed experimental treatment centers that you have to go to where a doctor who's licensed to practice in Montana could give you a drug. And this is where Infinita comes in, they're starting a review board, an experimental treatment review board where ethicists and doctors and scientists can review the treatment plans and sort of sign off as a kind of protection, a sort of protection for patients who might want to access these experimental drugs.
Hmm. And just to confirm here, so I mean, it's not just restricted to terminally ill. So the pool of people who are interested in this program, I mean, is this more so the crowd that is interested in longevity and expanding their lifespan, or are they still focused on people who are ill? Where does the massive interest lie right now?
I mean, that's a great question. And we don't exactly know the answer to it yet because the program literally just got up
Yeah.
and running last week. So these experimental treatment centers have to start. The review board that Infinita is running and other companies can come in and run boards too. They need to, review submissions by companies and by patients. But I do think that one of the impetuses behind this program is to allow people who are interested in longevity drugs to come to come into this program, and I think that's where a lot of the Silicon Valley interest is
Right.
coming
The
from.
Brian Johnson crowd.
Yeah, I mean, but other people, not just Brian Johnson. I mean, it can be people who, like lots of us are thinking about our health.
Totally. Yeah. No. I mean, it's
Yeah.
he's not the only person who wants to live longer. It's
No, but and have resources to do it
right.
because again, one of the big differences is you're gonna have to pay out of pocket most likely. I
Right.
mean, yes, under the program's rules, a drug company could offer to give you free treatment, and there is a feature in the program if you're a Montana resident, these experimental treatment centers are gonna put aside 2% of their net annual profits from distributing, providing the drugs to patients to go towards residents who might want access and can't afford. But for the rest of us, the most of us, you're probably going to be paying out of pocket. So you're going to have some sort of resources available to pay for things that aren't yet proven and therefore have a risk.
Right. So okay, so that's what the program is. Let's talk about how people are reacting to it. I mean, you talked to a number of different stakeholders. Let's start with the doctors. I mean, what do they think of this program inside Montana, outside Montana? I'm sure you got different opinions from people.
I mean, listen, from the doctor's perspective, They are gonna have to sign off on this. I mean, under the law in Montana, you have to have a healthcare provider who, like, thinks that this is a good idea. You can't just, like, randomly go into a treatment center and say, "Hey, give me this unapproved drug." So you're gonna have to persuade a doctor that, there's a reason that you should do this program. And I think a lot of doctors, I mean, there will be some who won't wanna participate, of course, but doctors, their goal is to try to get you better, to get you access to things. And if they think that there's something that might benefit from a drug that has some safety data, but hasn't gone through a full, process, an arduous process of showing that it works, it's effective, I think that there will be doctors. And in fact, there is a Montana doctor by law on this Infinita-backed review board. That's part of the law. You need a doctor on your board.
Right. And what about the patients? You spoke to people who are seeking to enroll in this program?
Yeah. I mean, look, I think that there will be patients that want to participate, and I spoke to some that are eager to participate. I think, the big obstacle for patients is going to be one, is this something I can afford? Two, do I live in Montana or can I get to Montana and spend some time in Montana? And three, and this has always been a big problem with all the existing right to try programs is this biotech company, are they gonna let me have access? Because that's always been the biggest obstacle. Biotech companies, for a lot of reasons, and we can talk about a few of them, don't always, even though they feel for you, don't always want to or can supply you with the drug as part of these programs.
Why not?
So, I think people have this image that everyone who develops a drug is a huge billion-dollar pharma company, and certainly they are important players in the market. But biotechs also are big players, and they don't have as much money. They've got to raise money virtually every time for every phase of their clinical trial. They're always scared they're going to run out of money. It takes over a decade usually if you're trying to get FDA approval to just get it across the finish line. And a lot of companies run out of money before they even make it across the finish line, even for good drugs, even for promising therapies. So a lot of them are scared. And then they're also scared because people who are going to access this program are people who can't be in a formal clinical trial, don't qualify for a clinical trial. And often they're very, very sick, or often they have some issue that makes them not qualify. If something bad happens,
Right.
the FDA, has the right under federal law, even if you're following all the rules under the state programs, if you're trying to get an FDA approved drug, they have the right to like decide, hey, that's really nice of you that you're giving drugs out in Montana, but we're going to have to like take a look at your broader program because something bad happened in Montana.
Right. And so that sort of gets to the third stakeholder here, which is, I mean, well, there are many. There's certainly the regulators, but the ethicists. I mean, what did you glean from the folks in the ethics field on how they think about this issue?
Yeah. So, for one thing, under this Montana program, you're required to have an ethicist on this experimental treatment review board. So, I think that's really a good feature of the program. But overall, I think ethicists are divided, as you might expect. I mean, it's a
Yeah.
really it's complicated. It's such
It's a hard issue.
yeah. I mean, on the one hand, the going outside sort of the purview of the FDA can make a lot of ethicists nervous because all these regulations are set up to protect you. I mean, companies like and even doctors or scientists that are developing drugs, they get excited, they think it seems promising, and then they find out later, hey, that's really dangerous, And so these laws are set up to protect you. But on the other hand, as one of the ethicists told me, who's also serving on the board, she said, don't forget about the invisible graveyard of people who, died while waiting for the FDA to rule on something, or died while waiting for companies that couldn't get across the finish line because they ran out of money and lost access to a good drug. Like, you're always weighing the risks and the benefits. But one thing that ethicists, I think, have trouble with this program is like, it does put a lot of burden on you and me as consumers, to decide if we want to take these risks. And I think, the Silicon Valley way has been, let us decide,
Right. I mean, all these entrepreneurs, I mean, basically the loudest voices that you hear in this movement seem to be, we aren't doing enough fast enough. And yeah, we're giving you the decision, but that's kind of the point, is you should have the decision. And I, that seems to, my last question for you was really, what do you think this says about Silicon Valley at large? Seems to be that people who fund these things, I mean, they want more choice on the market, and that's ultimately what it is.
Absolutely. I mean, I think the Silicon Valley ethos is really seen in this particular program. When you read the story, you can see that there's a lot of Silicon Valley ideas and companies and money and venture capital that is supporting these ideas. And I think there's a lot of reasons why we need to think really, really carefully about changing the system. I think they have lots of great points, but I think also, if you're sick or you're scared or you kind of don't know, it puts a lot of burden on you to really understand all the ins and outs when you don't have all the information. And in fact, when many of the companies don't have all the information yet, many of the doctors don't have all the information yet, and you're going to
Right.
make these huge decisions on your own.
Right. Well, Amy, I want to thank you for coming on. I encourage everyone to check out the story. It is our weekend big read. That is Amy Doxer Marcus, our health and science reporter here at The Information. That does it for today's show. A quick note, I am off next week. You'll be in great hands with our reporters who will be subbing in as guest hosts. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. If you can't make it then, episodes are available on theinformation.com, on our YouTube channel, or wherever you get your podcasts. Make sure to follow us on social media, on X, Instagram, TikTok, and LinkedIn. I am already excited to see you whenever I see you in a week and a bit. But have a great weekend. We'll see you on Monday. Talk soon. Bye-bye for now.